So you're expecting the big stock market to crash, or at least expecting something. You don't know what, but something to happen. So you want to prepare. And that is a good idea. Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money. Don't forget to subscribe. So let's get started. So in this video, guys, we are going over how to profit in a stock market crash. So we're going to be going over why we might think the stock market could crash in the near future. What are some concerns about the stock market that's going on like right now that are like iffy, and what things you could actually do to profit or at least prepare for something to happen. So we know the stock market has been very volatile recently for at least like a year, like 2 years. You know, the Twitterverse just shoots off and then the market drops. But we have been through market corrections. The market has been down like 10%, and even individual stocks have been down like around 30 or even more %. However, we are back up. We have rebounded. Right now we're recording like mid-March 2019. But could this really mean anything? Could something else occur after this rebound? So getting into the main issues why you might be worried about the stock market and how a market could actually crash because of these issues. The big one that the market was going up and down for a while now is trade wars and interest rates. Now, the Fed literally just announced that they are no longer going to be raising interest rates in 2019. Originally, they were going to increase rates a couple more times this year. However, they're not doing that anymore. The economy is predicted to be slowing. It's even slowing right now. And the stock market is more controlling of the Fed rather than the Fed being in control of the stock market. Really, no one's in control at this point. Maybe the big banks. Probably the big banks. But no one really knows what's going to happen. Another concern of the stock market that many people are completely disregarding or have no idea is happening is that the yield curve is inverted. And what that actually means is that short-term bonds are higher than long-term bonds, meaning like a short-term bond is paying more interest than a long-term bond. That means investors are uncertain about the future of the economy. What this matters to you, and why I'm even opening my mouth about it, is that this usually means bad things are coming. Previous crashes have happened shortly after an inverted yield curve. For example, like in 2008, the yield curve inverted, and then shortly after the market crashed. So could that possibly be a sign? Another sign that you guys might be worrying about with the stocks is that quantitative easing has, or so-called they say, has stopped. Before, they were just pumping money into bonds and just basically jacking up stocks and other investments. Now they have to sell all that debt. Yeah, well, how's that gonna happen? Because usually when there's a bunch of selling, things go down. So they gotta watch that. This has been brought up a few times. For me personally, I did mention this like a year ago on my channel, talking about a possible stock market crash, and this being one of the issues. And now it's kind of just like arising, and all these other problems people are finally realizing. So those are the main concerns. Everyone is concerned about everything in the stock market because no one knows what's going on. However, since we know the concerns, now we have to realize how we could prepare or even profit for a stock market correction or stock market crash. Basic understanding of the stock market, if you're a beginner, the stock market hates uncertainty. It has always hated uncertainty. A lot of investors, including Warren Buffett, is saying that you should be buying when there's blood in the streets. You know, when there's a lot of uncertainty, there's undervalued assets, and that's when you could purchase in. We'll get into that a little bit later, a little bit more in detail. However, since it is uncertain right now, there's no doubt about that. if you're looking for more certainty and really want to use your money to the best of its abilities, there are other things. For example, paying down debts. You can look at the differences between saving that money versus paying down your debts with that extra money. Debts could include, but not limited to, certainly not limited to, because there's a bunch of them. Of course, we all know student loan debt, credit card debt, car loan debt, any other debt, debt owed to Uncle Larry, all that kind of stuff. If you pay that stuff down, that's a guaranteed thing. You no longer owe that debt. And when you pay that interest rate off, for example, average interest rate for credit cards could be like 15%. If you pay that interest rate off, it's similar to be getting a 15% return because you no longer have to pay that interest. One method is the debt snowball popularized by Dave Ramsey. You either love him or hate him. However, that's basically focusing on paying off your smallest debts and going up to your largest debts. I did a recent video going over if his baby steps still apply in 2019, actually. If you guys are interested, link below. So whether you believe that paying down your debt is a good or bad idea, if you have no debts, fantastic, or if you think that's boring, then you could go into the next thing of saving that money. However, it's not just boring saving. There are reasons to save it. 2 reasons. The first reason to save more money instead of like using it somewhere else, you're hoarding it essentially, but you're saving it for opportunities. Like we said before, buying when there's blood in the streets. You essentially wait for the price to go down because that's where it's cheapest. You get in at that point. It's against most mental mindsets to buy when there's bad stuff going on, but you get in when it's low and then you sell when it's high, or just hold on to it forever so it goes higher. So you're saving that money for opportunity. So that could be with more stocks or even in other markets. Other markets we'll be talking about in a few minutes. However, aside from for opportunities, saving your money, you could simply use that money to pile up, to have a stronger financial backbone. Other people call it a cushion, emergency fund. You just need cash and wait for life to happen. You gotta be patient sometimes. So we talked about saving money during a stock market crash, whether you're a trader or investor. We're moving into something a little bit more gutsy, I guess you can say. But this is how you could actually profit with or during a stock market crash, or if anything happened. First thing you could do is you could short the market. That essentially means that you're betting for the stock market or individual stocks or whatever investment to go down. This was capitalized in the movie The Big Short. This was talking about the stock market crash of 2008, and they made billions of dollars because of that crash, and they shorted the market. And that was due to issues in real estate, but that's not always the case for every crash. Now, speaking of real estate, the second thing that you could do is diversification. Yes, you can have different stock, different sectors, different industries, different capitalizations, all these different things. However, you could also differentiate or diversify through different asset classes. One, for instance, would be real estate. Some other ones could be in starting your own business, for example, or even gold. Now, with gold, people are very iffy with that. Some people love gold, some people hate gold. You cannot deny the fact that the price of gold, or precious metals like gold and silver, do increase during recessions, during crashes, during corrections, because that's considered a safe haven. Just understand, as a long-term investment, you're probably not going to outperform the market by investing in commodities like that. And it's essentially speculation, and it's not like if we're going into a Great Depression, you're not going to go to the supermarket with your gold bar and try to buy bread. It's probably not going to happen. If you think you're going to be one of those ballers exchanging your gold and silver for food, thumbs up. I think that's cool to think of, whether that's possible or not, whatever. If If you're not one of those people, still give me a thumbs up. That would be fantastic. Anyway, getting back into the real estate thing, because it is still separate from the stock market. You know, stocks could go down, but real estate could do anything else. It could go down as well, like in 2008. It could remain the same, or even go opposite of the market and go up. So no matter what happens, you could still get that rental income. So every single month, whether the world ends or not, you're still getting that rent. Now, it might affect your tenant, like if they're attached to whatever goes wrong, it could affect it. However, all being the same, you could still rent that out even if stocks crash. So those are the main ideas that you can pursue in a stock market crash. You could either save your money, you could pay off debts, you could even try to profit off of it, diversification. However, if you're still worried about money, you can still take on other opportunities, business ventures, even side hustles. I did a recent video going over 10 side hustles that essentially anyone could get into. So if you're looking for extra income, link in the description. But more importantly, what about you guys? What do you think? Do you think there's a stock market crash coming? Do you think nothing's gonna happen? And how are you actually preparing for it? I think if we discuss this, you'll get some ideas that you never thought of, or other strategies, or just laugh at people investing in whatever assets you don't like. But I think discussion about this, because not really everyone knows what could happen. Something from left field could just destroy the economy out of nowhere, and you think a bad investment ends up being a good investment. So I think we should talk about it. So other than that, guys, that's all I got. So if you have any questions, comments, concerns, please leave them down below. Again, I'd love to hear what you guys have to say. Thank you so much for watching, and I'll see you in the next one.